Welcome back. Let's get a corporate conversation going. The company on our radar right now is Route Mobile. They came out with the numbers about a month back, but just to get a temperature check on the current quarter, we have with us Gautam Badalia, Chief Investor Relations, and the group's Chief Strategic Officer of the company now joining in. Gautam, thank you very much for joining in. I want to straight away get to your guidance for the full year at 18 to 22%. According to some analysts, it's a bit disappointing considering the revenue synergies you get from the Proximus deal plus the Vodafone Idea deal, which went live. So can you explain this guidance and are you being conservative?
Sure. Good morning, Rima, and good morning, everyone. So I think last quarter, I think we demonstrated among all the CPaaS players globally the best organic growth rates. I mean, since November of last year, there were a few headwinds, I think, in the sector that we were kind of operating, especially with the funding winter and a lot of large global enterprises looking at cost optimization. I think with this interest rate cycle now looking at kind of reversing, we have already started witnessing, growth now coming back. And last year, I think we've also been working with Proximus and the group on integrations and have been doing a little bit of crystal ball exercise. And we have kind of now worked on a few strategic pivots. A case in point is we're now securing long-term volumes with a lot of these large strategic players and then tying those volume up with the telcos. So essentially, we have a spread in between. So kind of making some part of our business as annuity business. So the 18 to 22% guidance that we have given for the year, it is, while it is conservative and in the past, always kind of delivered better than that. But I think this is, again, the best growth that I think in the CPaaS industry, anybody is kind of talking about. And we are able to kind of allude to this kind of a growth trajectory, largely because of the global platform that we have today. There isn't any other CPaaS company who would have the kind of presence that we have globally, right from US till any part of the globe. You look at, except for Australia and New Zealand, we have our presence now in terms of fleet of street. We were directly connected with 218 mobile network operators. Now, because of the Proximus reach, we are also now connected or extended our reach to about 450 networks. So, there isn't any other player who would have the kind of reach that we have today. And already, I think Microsoft deal, as I talked about, is a good starting point. It's a good validation of the group synergy. We are working on similar large strategic deals, securing volumes, and then tying those volumes up across 5 years, kind of converting that into annuity business. Now, from the telco standpoint also today, most telcos are today looking at digitizing its infrastructure. And that's where, partners like us, where we have kind of now coined a CPaaS in a box kind of a construct. We are taking those CPaaS in a box construct to telcos, deploying it into their infrastructure, and kind of making it completely a digital infrastructure, which they can then offer solutions to the SMBs. So these are the strategic pivots that we are working on. We are fairly confident of the next 3 to 5 years, we should be able to kind of embark on a strong growth trajectory.
Okay. In terms of margins, right, the EBITDA margin guidance is 13%. How do you see the margins increase from here on, both in FY25 and 26?
Yeah, so I think we're clocking, we are in the vicinity of the 12.5%, 13%. And this Proximus transaction will also entail a little bit of related party transactions, which will happen at about our EBITDA margin level. So it will be kind of a little dilutive on the EBITDA margin. So hence, we have kind of maintained that we will stick to the similar EBITDA margin that we are clocking today. So they're about the 12.5%, 13%. So we should be able to do the 13%. And if we are able to grow the business 15, 20% year on year for the next 3 years, there will be tremendous operating leverage that will play out. On top of that, I think the free cash generation of the business also should remarkably improve, I think, from this year onwards, considering we are not looking at giving any significant deposits to the telcos. So from an cash conversion, so EBITDA to cash conversion, I think we're looking at 50 to 75% kind of a conversion, and the skew should be more closer towards 75%.
Gautam, you said your organic growth in the quarter was the best in the industry. Do you have a number to put to that? And just to check, you're saying the guidance is conservative, right? FY25.
That's correct. I think we delivered about a 14% YOY growth. Organic growth, I think that was kind of the best in the industry. And especially, with a lot of these large deals, I think that are already in the making, some of the ones that we've already won. We are fairly confident of kind of clocking that 18 to 22% kind of the guidance that we have given. And if some of the large deals that we are chasing, I think some of them are at a negotiation, advanced negotiation stages. If some of them were to fructify, I think we should be able to improve on our guidance as well.
Okay, so if some of the large deals that you're currently in negotiation with fructify, then you will be able to beat your top line guidance. Just a quick word, what is your own estimate of the kind of billable transaction growth we will see and where you're likely to end the year with in terms of average realization?
Yeah, so in terms of the billable transactions, I think we anticipate kind of early teen kind of a growth. I mean, 12% kind of a volume growth. And in terms of the realization, I think it should steady around the current levels. We don't see any significant changes to the average realization.
Okay, all right. Thank you so much for joining us and speaking to CNBC TV 18. That's Route Mobile with an outlook on their business and the way forward. The market is not doing too much at the moment. It's very, very quiet. Just